We're back, and let's discuss the bottom-up approach now. And I'm showing you a chart that gives you once again what we have covered. So we did this top-down, and we'll cover the bottom-up approach. And really, the bottom-up approach is if your company has a set of customers, this becomes a much more straightforward, interesting, useful exercise because you know where to go, and you don't have to, and you can rely on what the customer said to a certain degree. And the bottom up approach is really this. You're going to basically take all your customers and you're going to take a look at what their next 12 quarter business to you is looking like. And obviously that business will be the existing product business, and also once they are told by you, once you introduce them that you have this new product that might be coming up, and then there is a process, there is a they all know if you are supplying to them, or if they are your customers, and the expectation is set all around that you will have a new version of the product coming up, and so they also know that you will need to understand what their business support is going to look like in the future, so that where and how fast and when to roll up this product development phase within your own company. So bottom line is you pretty much go through customer by customer for the next 12 quarters, and you add up all these numbers, and then you also have to accommodate for new customers that will be opening up to your product. And that is the part of the product definition and the strengths of the product. Any new product, you will have to make sure that you're not only serving the existing customers, but it's always nice to invite more customers and get them into your fold and win their hearts and minds and their wallets. And so the bottom up really comes down to adding up what their projections are to business to you. It is a much more time consuming, in the sense that you will have to perhaps visit each and every customer to get to this number. But sales is again the number one helper in this particular exercise for you. So in this case, sales is a very, very good friend of you. So you want to make sure you work with your sales department. And then out of this, when you do this bottom-up exercise, there is really no TAM or SAM or nothing that becomes all that relevant to you, because the actual units kind of drop out of what the customer says, and then you'll directly get to the units, number of units in the next 12 quarters. And so as I show in the next chart here, so you got your data from the top-down market research, you did the TAM analysis, you did the SAM, and you had SOM market share. And then now you have, on the other hand, the actual customers saying that they might probably buy this many units or this many licenses. So now if you look at these two next to each other, a straightforward way to look at this reconciliation is that you lay out this chart of what these units are from both the top down and bottom up in your 12 quarters, and it is what it is. First, there is definitely going to be a difference between these two numbers, and that is the whole purpose why you need to reconcile them. And most often, if you are quite confident, or if you think this is a straightforward exercise based on your own judgment and opinion about your own market, you may simply say that, look, I'm just going to take an average of these two, so that I'm not ignoring either one of these. That you could do that. That doesn't require any intelligent processing of the data. You just take an average of it. But perhaps you want to do a little bit more than that. Perhaps what you want to do is you want to look at, first of all, why there is a difference between these two numbers. But more importantly, I think what you should be alert to is this: if these two numbers are exactly the same, then you have to be very suspicious about what is going on here, because you know well, there doesn't have to be anything suspicious, but it is quite unlikely that a set of numbers from a third party market research report, out of which you derived your share of market, and then a set of numbers from your own customers, which are more real time, in the sense more latest set of data, because these market research numbers might have been published perhaps 3 months ago or 4 months ago or 6 months ago, and so there is always market is always changing, so you want to make sure that you don't take this. If they are both exactly the same, you don't take it as it is. You become alerted. And the second is, if they are radically different, also you need to be alert to why there is such a big difference. Are they not in the same market? Do they not have the same view? If one party, a market research company, is thinking wildly different from what your actual customers are saying, then what's going on. There is this inconsistency, and you want to be very careful in stepping into that inconsistency without questioning it. And so there are some reasons why these are different. For example, number one is that your customers, sometimes they may not tell you everything. They may not tell you the true story, meaning they may think that they don't want to raise undue expectations that they will give you a lot of business, and so even though they have plans to ship their product or to do their business in a bigger way, they may temper your expectations and give you less expected number. Or it could go other way around. If the customer thinks that they can really extract some pricing discounts, or they want to get something out from you, either a couple of years of free annual maintenance contracts or what have you, they may boost up their business numbers, and they say, look, we'll buy so many units from you, or we'll sign up so many additional licenses, so we are giving you so much more business, you have to give us this much of a price reduction, and so forth. But when it comes to the actual date when the product is launched, your product is launched, and when the actual business day comes, they may say, well, things have changed, and we can't be giving you so much of business. But then if there is any pricing discounts that you have given to them, they tend to remain that way, and so this is more of a tactical, strategic. There is a lot of dance that goes around in how customer says what he says and what you need to take from it. But all in all, this is all part of being in the business, and everyone wants to take care of what their future projections are in a more realistic way, and that is part of your job as a product manager also. And another thing is, even though you may have talked to all your customers, and if those customers tend to be 80% of entire market and the business in your segment, there may be new customers that are coming out, there may be new businesses that are setting up, and that may potentially be your new target market. And so talking to your existing customers definitely is not going to give you the idea of what is this new piece of business. And so maybe in that sense, this market research report, which is kind of looking at the macro view of where the market could be going, maybe there's something to what they're saying. And so you sort of round up all these questions, and you take a look at these two numbers and you reconcile them. That's how you do it. And so in the next lecture, so that pretty much sums up my discussion of both the top down and the bottom up. And if you recall, we have just picked one data point, unit sales, and and we sort of went back on two, market research based, top down and bottom up, customer based, and out of that unit sales came up, and then we reconciled them, so we're all good. Now we know, in fact, we know exactly how to get to that final business model unit sales number now. So we're going to take a look at rest of the curves. There's a gross margin, there's a return on investment, there's profit, and so on and so forth. So let's finish up that business model elements, and so that we are better prepared with our building the business case. Okay, so we will see you in the next lecture. Okay, thank you.